In this lesson, we're going to look at the next strategy, which is the CBO, or the complete breakout. So we're going to mainly reference it as the CBO, but it is called the complete breakout simply because it has the full break of the 4-hour 50 EMA and the 1-hour 50 EMA. So this is one of the safest strategies simply because it has that full complete breakout, and I'll explain fully what that is. But it is one step farther in development than the IBO. The IBO, the initial breakout, typically happens right before the CBO does, the complete breakout. So it's still at the beginning of the daily run. So we're still always focusing at the beginning of that daily run or the beginning of that daily pullback. And then this CBO typically happens within a 2 to 5 day window of that daily run or that daily pullback. So it's still pretty early in its development, and it's still at the beginning of that intraday trend, right? A run on a higher time frame is a trend on a lower time frame. So it still follows the same principles, and we're going to be applying multi-time frame analysis to this strategy as well, and everything else that we have learned at this point. So just know that the CBO is one of the safest strategies that we have. It's a very simple strategy, as simple as the IBO itself, maybe even simpler. So these first initial strategies, the IBO and the CBO, are very good to get started with. The next strategies after this are a little bit more advanced. So with that said, the CBO, let's have a look. So I'm going to start off by going through the full explanation of what the CBO actually looks like, what are the characteristics of the complete breakout strategy from the higher timeframes to the lower timeframes. And it's very similar to the IBO, except it has one more development, which is the break of the 4-hour 50 EMA, whereas the IBO does not have the break of the 4-hour 50 EMA. We're trading right through it, right? This is a little bit different. This is why it's safer than an IBO, is because we have that complete breakout, the break of the 4-hour 50 and the break of the 1-hour 50. So with that said, let's go through the characteristics of a complete breakout. One of the first things that we need is, number one, we need major support and resistance on the higher time frames, right? So the higher time frames are still extremely important. We need to apply that higher time frame analysis and then execute the trade on the lower time frames, right? So just like the IBO, higher time frames are extremely important. That's what we're going to start off with. Number one is, do we have some major level, right? Support and resistance, horizontal trend line, Fibonacci retracement, Fibonacci extension, maybe the 50 EMA, right? So do we have any type of support and resistance that is actually holding, right? So that's criterion number one. Criterion number two is the level actually being rejected, right? So do we have some kind of candlestick formation, specifically reversal candlestick formations that are rejecting that major support and resistance level? So with that said, let's have a look at the higher time frames to see what we actually have there. So this is the trade on the higher time frames, right? So this is a euro-dollar short position for just over 2.7% profit. And from the higher time frames, we can see that this is a pullback play, right? So this trade was executed right here, and it is a daily pullback because we can see that we're still overall with the bullish trend, and we don't have any bearish price action. We don't have a double top. We don't have a lower high. There's no head and shoulder pattern. There's no triangle. It is simply just a daily pullback, right? So that is the one thing that we always need to identify, is where are we within the trend? Is this a pullback? Is this a run? The one thing that we need to understand, and we'll talk about this a little bit more later into the lessons, but specifically when we start talking about management and so on. But whenever we're trading pullbacks are going to be quick in and out positions, right? And if we're trading the run, meaning that we're trading with the trend, that is when we can push these positions a little bit farther than the pullback, right? So just always remember that when we're trading with the run, with the trend, right? That is when we can push positions much farther, right? Because we're pushing the daily run and we're trading with the daily trend and so on. Whereas in this case, we're trading the pullback, we're going against the trend. And that is when we need to be a little bit quicker with our management, right? Quicker with our targets, and the positions are more in and out rather than holding for a few more days kind of thing. So with that said, criterion number one, do we have major support and resistance that is actually being rejected, right? So in this case, 1.25 is a level, and if we zoom out on this daily time frame, we can see that 1.25 acted as a little bit of support and resistance during this period in time. Not much over here, to be honest. And if we go farther, we have really good rejections right here. So in 2008, during the world recession, we rejected this 1.25 level perfectly on euro dollar. Again in 2009, again in 2006, more rejections in 2006, 2005, and so on. So we actually have a lot of really good rejections, right? Whenever we have a support and resistance level, we're always looking for at least 3 major rejections. In this case, we have much more than 3 major rejections, at least 1, 2, 3, 4, 5, 6, 7, 8, and this will be the 9th, right? So at least about 9 rejections at a minimum in this case. So it is a really good major support and resistance level. So that's criterion number 1. It is check, right? It is met. Criterion number 2, is that level actually being rejected with some kind of candlestick formation, right? So in this case, if we look a little bit closer into this daily time frame, we'll notice that we have been decelerating. So we're not accelerating anymore, right? We're actually decelerating as we're hitting this major resistance level. And we had this massive bullish push to the upside, but right after that, we had this bearish inside bar, or this hammer reversal candlestick, and then a break of this phase line, which is a lower time frame trend line connecting all these lows, right? So we had a clear break to the downside after rejecting that major 1.25 level. So when it comes to rejection, we do have it. Candlestick formation decelerated around that level, and we did reject that major area. So rejection is met. Criterion number 2 is met. That's kind of it, right? So right now, let's apply a little bit more analysis to this, because we are utilizing multi-timeframe analysis here, right? So we can go much deeper into analysis and start putting confluence factors on top of each other, right? So the minimum, this is the thing, the minimum criteria is met, whereas we have this major level and we have a rejection of this major level. Now we can add more analysis onto this, right? So if we look at the weekly chart as an example, this is the next step, is look at the weekly time frame. Are we trading with the momentum? Are we trading against the momentum, right? It's just going to tell us how much possibility is within this actual move. So if we look at the weekly chart, and we can see that the weekly chart had a doji the week before the entry happened, right? So the weekly chart is decelerating as well. And I mean, it's the same resistance level as the daily chart, right? So we have the same rejections, 1, 2, 3, 4, 5, 6, and so on. So 1.25 is a major support and resistance level, and that is being rejected. But it's still a pullback on a weekly chart, right? But we did have that doji, and you can see that we do have also bearish MACD divergence. So we are stuck in that confluence factor. So we have quite a bit bearish confluence factors here. Same thing on a monthly chart. I mean, it's a pullback on a monthly, pullback on a weekly, pullback on a daily, right? So that's always something to remember. But the monthly chart also has the same resistance level as the weekly and the daily. With that said, there's one more piece of confluence that we can draw in here, and it's figure out where we are within this actual trend. So utilizing Elliott waves and Fibonacci extension, right? So if we use Fibonacci extension on the weekly chart from the previous low to the high to the pullback, right? We can see that 1.6 or 0.618 Fibonacci extension in this case was perfectly rejected, and this is where we started to fall to the downside. So on top of this major resistance level at 1.25, we have another resistance level, which is 0.618 Fibonacci extension, right? And it will be the same thing on a daily chart. So if we add that onto the daily time frame, low to the high to the pullback, and there we go. And we have 0.618 again, a rejection here on a daily chart, really clear. So we have 2 major resistance level, which is really good, right? But it's still a pullback. The thing is, it's a pullback that has a weekly confluence and thus has a little bit of monthly confluence, but mainly it's a weekly trade where, because we have that doji, so we have weekly momentum, and then the daily chart is where the main analysis kind of occurs on this setup. So with that said, it is a pullback. How far can we push it, right? It's, if you think about it, we potentially finish this leg, Elliott wave leg or wave on the weekly time frame. So it's a weekly pullback as well. It's a daily pullback, but it's also a weekly pullback. So whenever we're trading a pullback, Fibonacci retracement is something that we can utilize to tell us how far it can actually go, right? In this case, we got 0.382 roughly over here at 1.216, right? So we can target anywhere between 1.22, 1.216 or 7 or so, right? Which also lines up with this daily 50 EMA, right? So from the extreme lows to the extreme highs on the daily chart, you can see it's the same levels, right? So we can target roughly 0.32 right here, which is the daily 50 EMA, or anywhere just around this area. The thing is, it's a pullback play, so we're going to be a little bit more aggressive with our management, and we will be talking about management later on as well. So with that said, criteria 1, major resistance level, check. Criteria 2, is that level actually rejected? It is, check. Criteria 3, falls into the lower time frames now, right? So if we go to the lower time frames, initial break of the 4-hour 50 EMA, right? That's criteria 3. Do we have a break of the 4-hour 50 EMA? We do, right? So in this case, we have a break of the 4-hour 50. We can also go deeper into this analysis and see that we have a triangle pattern. We have a double top, right? And in general, we're developing this triangle pattern with higher lows, right? Double top, breakdown, lower low, previous low, lower low, right? So we have this break of the 4-hour 50 EMA, and the trade happened right here on the retest, right? Same thing on a 1-hour chart. We have the same triangle on a 1-hour time frame, right? So criteria number 4 realistically is the break and retest of the 1-hour 50 EMA as well, right? It happens roughly at the exact same time. Criteria 3, criteria 4 in general is the break and retest of the 4-hour 50 EMA and the 1-hour 50 EMA. They roughly will align at roughly the same area. So in this case, you can see we're holding this triangle again on the 1-hour time frame beautifully, right? So the 1-hour 50 EMA hasn't been really acting as the best support level, but this trend line was, right? So as soon as we broke that trend line, we came back to retest the 1-hour 50 EMA, 0.382 Fibonacci retracement, and the 4-hour 50 EMA. So this is where the CBO differs from the IBO, is the IBO does not have the break and retest of the 4-hour 50. It only, right? It only has the break and retest of the 1-hour 50 EMA. That's it, right? Whereas the CBO, complete breakout, has the break and retest of both the 4-hour 50 and the 1-hour 50. And specifically, it's the initial break and retest of the 4-hour 50 EMA. It's not necessarily the initial break and retest of the 1-hour 50 EMA, whereas the IBO is the initial break and retest of the 1-hour 50 EMA, right? So this is again where they differ a little bit, but this is also why the CBO is safer than the IBO, is simply because we're not trading through that 4-hour 50 EMA anymore. We have a break of that 4-hour 50 EMA. Simple, right? So then the entry happens on the retest of 4-hour 50, 1-hour 50, 0.382 Fibonacci retracement. All of those levels typically line up roughly in the same area, not necessarily always in the exact same region, but roughly in that same area, 0.382 Fibonacci, 4-hour 50 EMA, 1-hour 50 EMA. So we enter these positions, the CBO, when we retest those 3 levels. So in this case, we can see that we came to retest, and then all of a sudden, the 5-minute time frame had that live 5-minute breakdown, which is our live entry, right? So we execute on a live 5-minute break. In this case, we can also obviously enter with an entry order, right? That's always a possibility with any trade. An entry order is always a possibility, specifically if you really love the trade. Otherwise, a live entry is always the safer option, simply because we have more development, more confirmation, right? So live 5-minute break, stop loss, always 0.618 Fibonacci, right? Always protected by 0.618 Fibonacci at minimum, sometimes 0.75, but at minimum 0.618 Fib. Whereas the IBO is usually the minimum stop placement on IBO is 0.75 Fibonacci, right? The reason for that, the reason why we can go tighter on a CBO stop placement is because we have that 4-hour 50 EMA that's acting as support or resistance in our favor, right? It's actually in our favor, rather we're not trading into it. It's on our side. Hence why we can go a little bit tighter on our stop loss with a CBO than an IBO, simply because we have that 4-hour 50 EMA protection, whereas with an IBO, we do not, right? So with an IBO, my favorite stop placement is at minimum 0.75 Fibonacci. With a CBO, at minimum 0.618 Fibonacci, right? So this is where the stop loss is. And again, I want to mention the safest target. In this case, I ended up pushing this trade a little bit farther because we had that higher time frame momentum, right? But the safest target often for a CBO will roughly be the previous lows, right? So the previous low on a 1-hour chart, the previous low on a 4-hour time frame, that would be like a quick 1-to-1 position, right? But we can obviously push these trades a little bit farther. Whenever it's a pullback play, right, we can push it down to the daily 20 EMA as an example. We can also push it down to 0.382 Fibonacci retracement, right? 0.382 Fibonacci retracement would often be the farthest I would push a trade on a pullback, right? So that's important to remember. On a pullback, the farthest I would push a trade is 0.382 Fibonacci. And that is only, literally, only if there's some kind of higher time frame momentum on our side. In this case, the weekly doji, good rejection of the weekly resistance level plus the end of that weekly trend because it rejected 0.618 Fibonacci extension, right? So I believe there's a weekly pullback coming, right? So the weekly is a little bit on our side. And because of that, I'm okay with pushing farther to 0.318, right? Fibonacci retracement. But I have to be cautious around the previous intraday lows because that would be the safest target, right? The previous intraday lows is often the safest target. Just like with an IBO, the safest target is the 4-hour 50 EMA, right? Always, the safest target is the 4-hour 50 EMA. Quick position, usually 1-to-1, maybe 1.5-to-1 reward risk ratio. With a CBO, the safest position, the safest target would be the previous lows or the previous highs, right? So the previous intraday lows or highs. The second would be the 20 EMA on a pullback, right? This is on a pullback. And the third will be 0.382 Fibonacci retracement, right? So in this case, because we have the higher time frame confirmation, right? A little bit more development on those higher time frames, a little bit more momentum because of the weekly pullback, I chose to target 0.382 Fibonacci with an aggressive management approach, right? In this case, I utilized short-term aggressive management where I ended up taking profit early, right? There's a few different management styles, mainly for day trading, is short-term management and short-term aggressive. And I'll talk about that later, right? When we actually dig into the management lessons. But in this case, after you guys review the management lessons, you can come back to this and just know that I utilized short-term aggressive management. I ended up shutting this position when the 4-hour chart started decelerating, formed a low test. The 1-hour chart had a kind of a double bottom, right? Rejecting these previous lows. So kind of a double bottom and a bullish engulfing. So 1-hour chart, double bottom, bullish engulfing, bullish MACD, 4-hour low test. And that is when I ended up shutting down the position for just under 3% profit. So that's kind of it for a CBO. Pretty simple, right? The main things that we're looking for is number one, major resistance on a daily time frame, right? And on the higher time frames in general. Major resistance in general that would, or support. Major support and resistance that is being rejected. That's criteria number one. Criteria number two, is that level actually being rejected? Do we have reversal candlestick formations? Do we have deceleration on those higher time frames, right? During that same time, you can also do your multi-timeframe analysis. What's the monthly chart showing us? What's the weekly chart showing us? Do we have that higher time frame bias? Or is this simply something that's really nice on a daily chart and doesn't have any higher time frame bias on a weekly or on a monthly? Right, we need to identify that. We also need to identify whether it's a pullback or it's with the run, because that will tell us how far we will push this position. But that's extra confluence factors. That's extra digging. That is full multi-timeframe analysis. In minimum, criteria one, major support and resistance. Criteria two, make sure that support and resistance level is being rejected. Criterion number 3, trend change. A run on a higher time frame is a trend on a lower time frame. In this case, it has more development than the IBO. Criterion number 3 is the break and retest of the 4-hour 50 EMA, like we have seen here, the breakdown and the retest of the 4-hour 50. And criterion number 4 is also a rejection. We will already be in a trend on a 1-hour chart, and this will be a rejection of the 1-hour 50 EMA. So a CBO in general is at the beginning, it happens at the beginning of runs. It will also be at the beginning of lower time frame trends, right? And it's mainly, the easiest way to identify a CBO is that it's the initial break of the 4-hour 50 EMA, and it's the break and retest of the 4-hour 50 EMA, 1-hour 50 EMA, 0.382 Fibonacci retracement, right? So that is what the CBO is. It is a very simple position, very simple setup, very simple strategy, right? And it's also the safest strategy that we have, simply because it has this complete breakout. That is why it's called a complete breakout, a CBO. So that is it for now. In the next lesson, I'm going to show you how to execute this position, how it actually looks live, right? From an entry to stop loss to the targets and the management. So with that said, hope you enjoy this lesson, and I'll see you in the next one.